In this video, we discuss other healthcare stocks that are on our watch lists and our ideas in our portfolio. I hope you enjoy.
So I guess that takes us on to some other healthcare stocks. Some other ones are having a big tough time at the moment, like Novo and Oscar Health. Just wondering your thoughts on any other healthcare stocks, any other ones kind of catching your eye at the moment?
Yeah, there are a couple on my watch list I don't know a huge amount about. I will touch on Tempus, or like they're on my watch list. I've yet to do the deep dive on them, but I'm kind of interested. And I'm
Right,
interested to ask about United Health because I know you touched on that.
right.
Because that looks very cheap, and that's another story. But Tempus, I have a holding in. I've had a holding in Tempus since the start of the year. Very, very volatile. So I trade Tempus quite a lot. And also, it's very expensive and kind of unclear at the moment because they've just done an acquisition. Their weakness, and I'm sorry if you're listening, anyone from Tempest, which you're probably not, but their weakness is capital prudency. And the CEO Eric Lefkowski previously ran Groupon that grew very
Right.
quickly, but maybe just overextended itself and has
Mm.
since kind of just faded away into not very much. They're still a public company operating, but they've just kind of faded away. Anyway, Tempest is very interesting because two things that make it very unique. They're AI from the ground up, and they've been focusing on AI since 2015. So they're an actual AI. They've not been using it as a buzzword since 2023. They're an actual AI first healthcare company, and they've got extremely unique data advantages because they've got data. They've got the largest like cancer data database ever. It's like 20 times the genome atlas. I can't remember what it's called. They've got a massive data base, and obviously that data, healthcare data, is very sensitive. It's very difficult to obtain, and I can go into it more if you want. But there's they analyze people's genomes and profile and tumors to basically recommend different treatments for doctors. So they collect that data in that way, and they can aggregate insights, and then they have a data and services business, and they can sell those aggregated insights and help big pharma companies and things like that. The fact that that data is difficult to obtain makes it unique. That stops like one of the big guys that may have superior AI from creating a more powerful AI. And AI is only as good as the data it's trained on. It's very different from like, oh, you and me build a weather app, an AI that predicts the weather. Oh yeah, Google can just run us over because Google's got better AI and everyone knows what the weather's doing. That's easy data. Contrast that with healthcare data is obviously there's a lot of like protection laws against it, etc., and only certain people have access to it. But Tempest is an interesting one, definitely high risk. They've got a long way to go until they're like optimized, but they've got a big acquisition. I really think they have a lot of potential. Very expensive. The best I can value it is probably on gross profit. They're 35 times gross. And it's important to
Mhm.
look at gross because they've got two different businesses with different margins. So value it on gross profit if you look at Tempest.
I was just looking then when you were, I never heard of it before. I was just looking when you were talking, and it's growing like a weed at the moment. It's growing at like 89% a quarter in the latest quarter. The only thing that would put me
And
off
some
this
of that's
is,
from the acquisition, but I think organic is still going to
oh
be
yeah,
about 35 40. Organic still 35 40. And once they've actually synergized the acquisition again, then we'll see what the organic growth is. But yeah, organic still like 35 40 on the top line.
yeah, yeah. The only thing that would put me off this is that I've got a rule that I invest in. It's got to get to a break even point of view in 2 years of investing. And I'm just looking now and I'm not sure if it's going to do that at the moment. And that would maybe put me off at
Do you mean on price action or on net profit or on free
net
cash
profit.
flow? Net profit. I would probably agree. That will be much more clear once they've actually simplified everything with regards to the acquisition. But I
Mm,
would agree. It's like they've got the potential of HIMS. Although it's different, they're more like AI and data focus and less sort of consumer focus. But HIMS had a much better time in terms of their financial prudency, and I always like that about HIMS. Yeah, with Tempest, you don't know exactly when you're going to break even, and that's why I mentioned that it was the weakness is that the CEO ran Groupon, and Groupon had massive losses for a long time. So, and also this is the thing: it's like he's already rich. Not that that's his motivation. His motivation is that his wife got diagnosed with breast cancer, and he was just really frustrated that there's about personalized medicine, that like someone's sick and you're just going to do spray and pray. Oh, this chemo works, this chemo works. He wants to completely change that, starting in oncology, but they're doing a lot of other segments of healthcare as well. So the thing is that, you know, is his number one goal financial prudency right now? Probably not. Yeah, they're growing and they're taking advantage of growth opportunities, and they've got a lot to do. They're a very ambitious company, but yeah, that's the main risk, is that can they actually get profitable, and are they more organically getting profitable, or is the acquisition that I think is profitable, is that just going to make it look more profitable? Do you know what I mean? Then they're going to get back into the same habit of maybe growing too fast. So Tempus is a high risk one. But yeah, those are my main healthcare stocks for now. I looked at LifeMD. I'm not too keen on LifeMD. What about the United Health situation? Because they've crashed a lot, and that's not a business that is easy to destroy.
Yeah. I decided to stay away from United Health. So it's been something I've been thinking about for a while, and eventually went, you know what, I'm gonna walk away from here. Um, I don't normally like invest in healthcare space, which is funny because we just mentioned about Hims and Hers, but the difference is with Hims and Hers, it's control their own destiny. You know, it's all funded from the clients. Whereas with the United Health, you've got all the Medicare health issue going at the moment. The big thing that puts me off, or put me off with United Health, is when the DOJ investigation came out about the fraudulent claims. That just really put me off. That's a red flag that made it unvestable for me. And the fact that it was obvious as well that there was some sort of investigation that they're going on, and they lied about it. And originally they came out and said, no, there's no investigation going on, and they denied it. And then we saw from the eventually, like a month later, they said that actually, oh, there's an investigation going on with DOJ, and that was just, for me, that was like complete red flag where I can't touch it. For me, I don't know if it'll end up being anything major, but for me, I like to think worst case scenario, and I think that was enough to really put me off at the time. The only thing that puts me off is, like, you know, it's been an absolute gem of a performer, but for me, I just get so nervous because I just find it really hard to forecast that healthcare space, and you know, the cost from the healthcare plans, and this is there going to be a surge of treatments, and it's just too hard and too foggy to forecast on the guidance.
I get that. I get that. And it
Is
kind
it
of
one
goes
you're
back to what we
interested
were
in?
saying earlier. Is like United Healthcare. This is the problem. And there's actually, I don't know how much you know about Lemonade, but they're in the insurance space and they try and solve this problem. But I don't know if they do it for health insurance, public company, and actually doing really well. But the issue is that there's literally, like, the health insurer is against the consumer. So okay, like whatever, United Health, come after me if you want, but make they make a business. I mean, you look at how much premiums have gone up, right? This is why that there's such an opportunity for Hims and Hers. Premiums have gone up, deductibles have gone up, like all of so much of the cost of healthcare is just because of the actual, like, deductibles and the cost of health insurance. And United Health, unfortunately, I think that they're going to do well. I don't necessarily want them to do well, just because they have such a breadth of control over the healthcare industry. I mean, what was their market cap before they crashed? Like 400 billion,
Oh, it's
500
massive,
billion,
yeah.
something ridiculous. It actually shows you how big the healthcare industry is. And that's what's nice about, like, looking at Hims and Hers and LifeMD and these kind of companies. I'm not saying that they're like absolutely perfect, right? But it's like a damn sight better than this kind of healthcare company where you have to pay for this health insurance, and they actually make more money by denying your claim. So yeah, I think United. I honestly don't know, like, the ins and outs of the recent situation with fraud, but it also depends on if you're comfortable in investing in a company where, instead of being that 0 to 1 business that's actually making a positive, like, step towards the future, you're kind of just rent seeking. You have so much control. Um, it's just yeah, it's just crazy. But whether it's a good investment or not depends, because I do see it's very cheap. I do think the revenue will grow, and unfortunately, in my opinion, I do think they will be around for a very long time.
Yeah. I think if you take the point of view that if you come back in 2030 and United Health going to be higher than where it is right now, I do think it's going to be higher than where it is right now. But the thing is, I don't need to own every stock that's out there. I just need to own the ones that that are the best opportunities that I think, and the one that I've got the highest conviction in, the 100% conviction in, and the ones that I'm comfortable with. I don't need to have the controversy with it or that's going around with United Health, and I just need to own what I'm comfortable with. And there's going to be some stocks that I look at and I think won't work out, and don't invest them, and they'll go up and I wish I bought them. But at the end of the day, I'd rather just be able to go to bed at night and sleep and know the stocks that I've got with my money in are the high conviction ones, and that's the better place to be in.
Absolutely. Look, I love the fact that I think there's about 25,000 public companies in the world, about 6,000 in the US, a couple of thousand in the UK, but about 25,000 in the world. And this is the point. Like you touched on the bottom point. You only need a few. It depends on your risk appetite. Some people do five, some people do 10, 15, 20. By the time you get to 25, the cost to your time and energy of adding another stock is quite a lot. Like by the time you get to 30 holdings, it's a lot. You don't need more than 30. That allows you for over 99% of the market, or 99.9 if we're counting the 25,000, to say no, 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 no. So it's easy. Yeah, like United Health might go higher, but if you're unsure on the thesis or if you have ethical concerns about investing in it, that's fine. Move on. Like nothing bad happens if you don't invest in a stock that does well. You just want to avoid investing in a stock that doesn't do well, right?